Rupee ended the last week a tad lower at 75.65 after testing a high of 75.43 on Friday. The portfolio inflows of over 3.7 billion in this month till date also supported a gradual ascent in the rupee exchange rate. All in all, this is a good news for the importers and exporters to experience a lower volatility in the exchange rate. The range-bound trade within the 75.30 to 76.30 level is providing the flexibility to the exporter entities to hedge their forex payables and receivables at the appropriate level to crystallize the cash flows. It is sufficient to cover close to 15 months of imports, which indicates a comfortable external position of the country. As a result of lower demand in the overseas markets and contraction in non-oil imports, the current account is expected to end the fiscal with a surplus, and the balance of payment position shall register a huge rise at the end of the current financial year. These positive factors shall lead to a reasonable stability in the exchange rate, which would neutralize any adverse economic data being released in the remainder of the year. The long-term foreign currency borrowers would benefit by the translation gains of over 0.25% in absolute terms at the end of the June quarter. This is against the revaluation losses of over 6.10% in absolute terms in the January to March 2020 quarter. Supported by a consecutive rise in the BSE Sensex in the last 45 days time period and huge accretion in forex reserves, Rupee successfully ended the week a lot higher. From the end of December 2019 till date, the rupee had depreciated by about 6% in absolute terms, which cannot be viewed as a high dose of depreciation in the domestic currency after reckoning the various adverse events in the domestic and overseas markets during the said period. We feel the central bank would disallow any appreciation in the rupee exchange rate beyond the 75.30 level due to prevailing market uncertainties. With the increase in virus cases and death tolls in India on an increase, the rupee's appreciation is expected to be capped at 75.30. The benchmark BSE Sensex had recovered by more than 35% from the low of 25,931 on 23rd March 2020 and Friday's closing level of 35,171, almost erasing all the losses it suffered from the middle of January 2020 till 23/3/2020. Even though the domestic currency volatility has significantly reduced, the corporates are well advised to hedge their exposures at the internal benchmark rate set for each item of exposure. This approach, if adhered to strictly, would help the exposure entities to crystallize the cash flows at the opportune time to eliminate the exchange rate losses and ensure value addition to the exposures. Due to an uptick in the rupee exchange rate against the dollar, the forward dollar premia for 3-month and 6-month maturities have inched a little higher to end the week at 3.65% and 3.78% per annum, respectively. The appreciation in forward rupee in near-term maturities is expected to continue for some time, providing good opportunity to importers to hedge their near-term payables initiated in the last 2 to 3 weeks time period or so.